On today's video, we'll talk about what makes Microsoft such a good company, why I think this is one of those core buy and hold investments that should be in everyone's portfolio. We'll talk about why this is one of those companies that you consistently should add to on any dips. You don't really worry about it when they report earnings, when they miss earnings, whatever the case may be. And then maybe in 20 years, when you decide to finally sell your shares, well, you retire a happy old man. We'll talk about their Q3 results. This one is on a funky fiscal calendar year, so posted their Q3 results. We'll talk about the guidance which they provide on the conference call at 5:30 p.m. Eastern time. We'll also talk about some of the results, how it relates to some of their data center spend, and how it relates to data center companies as well. We'll take a look at their different growth rates on their different units, different segments. Of course, this is one of those companies that does everything. They're in the cloud, they're in consumer products, they're in commercial products, they're of course in search and advertising, they're on LinkedIn, they own Xbox. I mean, there's nothing that Microsoft doesn't do, and that certainly adds to their appeal, that adds to their moat. That's what makes them such a great company. We'll talk about the income statement as well. One of the things that makes Microsoft so good is the fact that they're able to grow those revenues without actually growing those expenses. We'll see that when we get to the statement of income. And then from a technical perspective, this one is moving higher in the after hours, nearly 8%. We'll see what this move means from a technical perspective. We'll stretch the chart out a little bit and see where shares of Microsoft will likely head over the next couple of years. Hey guys, hope you're doing well out there. Shares of Microsoft popping nearly 8% in the after hours, despite being down roughly 2% over the past 1 year, down about 6% year to date. This one has seen underperformance, like we said from the chart. I mean, it's gone sideways since about basically November of 2023. And so you've had a long period of consolidation. Again, not necessarily a bad thing with stocks like this. Gives you the time to accumulate it, gives you the time to even maybe open a position if you are just new to investing. And from a multiple perspective, that consolidation also brings down the valuation as this company continues to deliver on results. And speaking of delivering on results, that's exactly what they did, with Q3 revenues growing 13% up to $70 billion. Look, growing 13% isn't all that exciting, except when you take a look at the number that it's growing from, and that's a base of nearly $70 billion. Again, that is very impressive, beating expectations, also beating those expectations on an earnings per share side. Now, Microsoft has three different business units, the first one being productivity and business processes. This is their largest segment, up to nearly $30 billion, growth of close to 10% year over year. This includes, of course, M365, all their commercial cloud products, maybe even Copilot in there as well. And then next up, you have Intelligent Cloud, which is at nearly $27 billion. That was up close to 21%. Again, on a constant currency basis, nearly 22%. You can throw in Azure in that segment. And then you lastly have more personal computing. Think of Xbox, think of Windows OEM, think of your PC demand in there as well. And that came in at $13 billion, up nearly 6% year over year. So all three business units over at Microsoft continuing to grow, continuing to show why this company is so dominant. Now, the important thing with Microsoft is you get the guidance for the upcoming quarter on the conference call. That comes out at 5:30 p.m. Eastern. So this video came in a bit late, considering the fact that we were listening to that conference call, looking for that Q4 guide, which we got right here. By the way, I am now on X, so follow me on X if you haven't already. So the Q4 guide came in with productivity and businesses about $32.3 billion. That would be roughly 11% growth in the upcoming Q4. The Intelligent Cloud business expecting roughly 20 to 22% growth, and then more personal computing expecting a slow single-digit decline on that side of the business. So when you add up their three different segments, that'll give you a Q4 revenue figure roughly $73.5 billion. Now, the expectations on Wall Street were about $72.3 billion. So Microsoft coming in about $1 billion, call it $1.3 billion higher on their midpoint compared to the average estimate on Wall Street. And they're coming in just shy underneath the high end estimate. But when you compare it to the low end, I mean, they're well above that, nearly $4 billion higher than the low end estimate. And when they came out with those Q4 guidance results, that's when the stock popped in the after hours, adding about 3 to 4% to its after hours gain. So of course, the guidance certainly is good. Now, the other thing, of course, they're asked on the conference call are a ton of questions regarding different parts of their business. So we'll get into some of those questions. The first one they were asked about is, how does Microsoft fare during a recession? Certainly, they've gone through recessions in the past, but perhaps if there's another recession down the road, how would they sort of handle that? Well, the answer was that Microsoft generally is fine during inflationary pressures or growth pressures. Since it's mainly a software business, yeah, they'll be fine nonetheless. In terms of the CapEx for the upcoming fiscal year, they also mentioned that CapEx figure remains unchanged, but it will grow compared to fiscal year 2025. So I believe at the start of this year, they provided a figure close to $80 billion in CapEx. That's something that's remaining unchanged. Again, it will likely grow next year in fiscal 2026, but it will grow at a slower rate than it did in fiscal 2025. The other question they were asked about is there's been rather a couple of news stories regarding Microsoft possibly walking away from some data center commitments, and they quickly tamped down any expectations on that, as they said, well, they keep having to adjust for data center commitments, whether it's based on demand, whether it's based on geography. They certainly don't want to put one big data center in one place and then see demand shift to another geography. The other thing they mentioned is the difference between training versus inferencing. They have to make sure their data center is capable and really set up to handle both sort of workloads. The other thing they also mentioned is that they will be short on power, especially when it comes to their data center commitment. So it could be slightly bullish for maybe stocks that provide power to large data centers. The fact that you still have a fair amount of data center build out, and the fact that power is one of those limiting components on that data center build out. They were of course asked about the Azure growth lift from AI, and they actually did mention the majority of the outperformance on Azure was actually due to the non-AI side of the business, and the overall relative strength in Azure came from the fact that they were able to actually deliver supply to their customers relatively early throughout the quarter. So in the past couple of quarters, they've been rather supply constrained, and so they haven't been able to meet their customers' needs fully throughout the quarters. I think this quarter they were able to actually meet those demands from their customers more on time. The other thing they did mention was the margins on the AI side of the business today are far better than they were during the server to cloud transition at this point. So that should tell you that Microsoft is expecting a big transition from, I guess, traditional computing to AI accelerated or hardware accelerated computing. And that transition, at this point at least, looks a lot better than the transition that we saw from the server to cloud that really gave birth to AWS and Azure and Google Cloud and things of that nature. So look, if you are bullish on Microsoft, bullish on these hyperscalers with these large cloud infrastructures, well, that's a sign and that's a reason to continue to remain bullish, considering the fact that the margins on these businesses are likely a lot better. Now, in terms of Microsoft's different business segments, again, we talked about it at the top. It's a company that really does everything. In terms of their cloud and the Azure side, that's the important figure that analysts like to pay attention to, came in at 33%. That was beating those growth expectations on the street, which were closer to 31%. In fact, I believe on all of their different segments, they actually came in ahead of the analysts' expectations. In terms of LinkedIn, growing about 7%. They're also growing very nicely on the search and news advertising, up about 21%. So this is probably an area where Microsoft has previously, I would say, lagged and struggled, especially compared to Google. But I think integrating Copilot, integrating ChatGPT within Bing, I think that is actually helping their search and advertising business quite meaningfully. You're seeing the growth accelerating in that part of the business. The other part that's really important is the M365 commercial and the M365 consumer, growing roughly about 10 to 12% there as well. So again, this company firing on all cylinders. You're seeing growth across the board, something this company actually delivers time in and time out. Now, in terms of their different revenue mix, they have about $15 billion they get from the product side, which is down about $2 billion year over year, but that is more than enough made up for on the service side, which went from about 44.7 up to call it $54.7 billion in the most recent quarter. Over the last 9 months on the services side, you're pushing about $160 billion of top line revenue. Again, that's just a staggering figure. I know we're just brushing these numbers off. This is a huge amount of top line revenues. In fact, total revenues came in north of $70 billion over the last 3 months. Now, you do have some cost of revenues. The good thing to see is that despite lower top line revenues on the product side, they were actually also lowering the cost of revenues on the product side from 4.3 down to $3 billion. So you're not really losing too much margin on that product side, despite the revenue actually declining. Overall, your gross margin went from 43, call it up to 48 billion. So you added about $5 billion on the gross profit side. You added about $9 billion on the top line side. Again, should tell you the efficiencies that Microsoft beginning to unlock. It's now a much higher margin business today than it was, say, probably 10, 15, even 20 years ago. The other thing we mentioned at the top is what makes Microsoft such a great company is the fact that they're able to grow those revenues while controlling their operating expenses. So you did see a tick up on your R&D from 7.6 up to 8.2, but again, not meaningful, about $500 million on the R&D side. And then on the sales and marketing side, staying basically flat on a dollar to dollar basis. And then G&A actually coming down from 1.9 down to 1.7. We just saw this with Meta as they drove their G&A costs down significantly as well. I'm guessing a lot of these companies are actually using AI on the G&A and on the sales and marketing side internally quite a bit as well. So that allowed your operating income to go from 27.5 all the way up to $32 billion. You added about $5 billion on your operating income side. Like we said, you added about $5 billion on your gross margin side. So pretty much dollar for dollar, your gross margin translated into your operating income. That's impressive to see over at Microsoft. You pay off some income taxes and you get to net income about $25.8 billion in the most recent 3 months. I mean, that's giving you about $7 billion of net income every single month. That is certainly impressive to see. Now, from a balance sheet perspective, you're looking at about $80 billion in cash equivalents, and short-term investments. Actually quite similar to what we saw with Meta. They're looking at about $70 billion in cash and cash equivalents as well. In terms of the liability side, wiped out their short-term debt, which was sitting at about $6.6 billion over just 9 months ago. On the long-term debt side, still have about $40 billion there. This company does like to do tuck-in acquisitions every now and then, especially in a looser regulatory environment. I can expect Microsoft to go out there, look to maybe pick up some security firms, maybe some networking firms. There were some rumors that Microsoft is in talks to maybe acquire TikTok. That certainly can bolster on a ton onto their search and advertising business, something I don't see happening though, simply from an antitrust perspective. But I think all things considered, you still have a decent amount of debt at $40 billion, but I mean, when you compare it to the nearly $80 billion of cash equivalents, nothing to be overly concerned with. I mean, this company continue to just generate huge amounts of operating cash flows, which, speaking of, in the most recent 3 months, nearly $37 billion of operating cash flows over the last 3 months. Over the last 9 months, that figure is close to $93 billion. We'll jump down to the investing activities for just a second. And this here, you have your CapEx figure of $16.7 billion in the most recent quarter. Compared to last year, it's up about 60%. Again, telling you the growth rates on the CapEx are substantial, although they did say in fiscal 2026, they'll slow down the growth rates on the CapEx, although they'll still be higher than they are at the current time. And over the last 9 months, you're looking at close to $47 billion of CapEx. That still leaves you with a fair amount of free cash flow. You take this 37 operating cash flow, you subtract out about $16 billion, leaves you still with about $20 billion of free cash flow in this most recent quarter. And with that, they pay off some of their debt. They also buy back nearly $4.7 billion worth of the stock. And then they pay off nearly $6 billion in dividends as well. All things considered, they added about $11 billion onto their cash pile in the most recent quarter. I mean, things look good over at Microsoft. Things pretty much always look good. Some years, they just look a little bit better than others. Now, from a technical perspective, things are also looking pretty good over at Microsoft, as this one had been consolidating within this green box. This is sort of my buying zone or buying box with Microsoft, with between 366 up to, call it, the 400s, low 400s. Within that range, I mean, if you can pick up shares of Microsoft, you'll probably be looking pretty good for the long term. You'll also be looking pretty good today in the short term, considering the stock closer to $430 in the after hours. Your next level of resistance is actually probably right here where the stock is, considering this was the lower end of our channel that we had seen since December of 2023. So if you can see a higher pop with shares of Microsoft get back into this uptrend, well, then that will be super bullish. That'll likely mean the uptrend is back in play. You'll likely continue to channel higher with shares of Microsoft. One thing you can get is maybe a rejection here, come back and back test maybe this low $400 range and begin a new uptrend down here. That'll give you plenty of buying opportunities likely within this green box that you can continue to nibble into with shares of Microsoft. I think anytime it comes closer to the $400 range, low 400s, even underneath that in the mid 300s, I think that is your time to step in and buy shares of Microsoft. Because if you stretch it out over a long period of time, look, there's periods of consolidation where shares go sideways for a number of years. But if you stretch it out, I mean, you can't even see the sort of blips in shares of Microsoft. This is one you continue to buy, you continue to hold, and you absolutely don't worry about it. That was my take on shares of Microsoft. They reaffirmed their CapEx guide, which is again probably bullish for data center companies out there, probably bullish for the chip stocks. We heard similar news, in fact better news from Meta, as they actually raised their CapEx guide. So despite all the fears you hear in the market of hyperscalers pulling back on data center spend, well, we just heard from Meta and Microsoft and Google last week that there's absolutely no plans to do that. If anything, data center spend will absolutely continue for the remainder of this year, possibly even next year. Thanks so much for listening. I'll catch you guys in the next video.